Ford's been around for over a century, but is the automaker built for the next one? As electric cars surge and profits dip, the blue oval is at the crossroads. Can it still dominate the road, or is it falling behind in the fast lane? In this video, we're diving into what's really happening inside Ford, from its business model, financial health, and strategies, to how it's navigating today's wild industry shifts. Stick around, because we're breaking down everything from the numbers to the nuts and bolts, and by the end, you'll know whether Ford is revving up for a comeback or running on fumes. Let's get into it. It all started in 1903, when Henry Ford and a group of investors launched the Ford Motor Company. By 1908, the Model T was born, affordable, durable, and easy to repair. Ford literally changed the game. Fast forward to 1913, and we've got the moving assembly line, slashing production time from 12 hours to 90 minutes. Over the decades, Ford introduced icons like the Mustang, expanding globally and made history in both design and production. Today, Ford is steering into a tech-driven electric future with vehicles like the Mustang Mach-E and an ambitious goal to electrify the world. Starting off with the business model of Ford, we see a snapshot of key elements that make up the entire business of what Ford does. Starting with key partners, we see retail dealerships, automobile suppliers and vendors, technology providers, financial institutions, fleet partners, marketing and advertising agencies, government and regulatory bodies, research and development institutes, and logistics and transportation companies. As for key activities, we have product development, marketing and brand management, sourcing and supply chain, dealer network management, and financing services. As for key resources, we have manufacturing facilities, skilled workforce, brand reputation, intellectual property, research and development facilities, and technology systems. As for Ford's value proposition, we have reliability, smart technology, advanced safety features, seamless customer experience, and cost-effective solutions for businesses just like the Ford Pro. For customer relationships, we have personalized customer support, strong dealer network engagement, loyalty programs or the Ford Pass, customer feedback channels, and social media interaction. As for Ford's channels, we have company stores, independent dealerships, and third-party retailers. As for Ford's customer segments, we have mass market consumers, fleet customers, luxury buyers, performance enthusiasts, and commercial and work customers. For Ford's cost structure, we have a total cost and expenses for the year 2024 approximately $180 billion, with the following bullets as the breakdown. And last but not the least, the revenue streams for Ford for the year 2024 is approximately $185 billion, with the following bullets as the breakdown. Political decisions such as tariffs on imported car parts and changing emission regulations challenged Ford's supply chain and pushed the company to rethink its global manufacturing strategies. With US inflation decreasing to 2.82%, economic indicators remain volatile. Analysts warn that higher prices from tariffs could reduce demand, leaving Americans with less disposable income and reshaping how Ford markets its vehicles. Social trends are evolving. There's growing demand for electric vehicles, a shift towards subscription-based mobility, and rising awareness among budget-conscious and sustainability-focused consumers, changing how Ford connects with its customers. Technology is transforming the auto industry. Ford is investing in artificial intelligence, autonomous driving, electrification, and connected systems to stay at the forefront of innovation. Strict safety and emission standards, labor laws, and consumer protection regulations all shape Ford's manufacturing and workforce decisions, demanding continuous adaptation. Ford recognizes the environmental cost of transportation, especially emissions from personal vehicles and battery production. The challenge would be building greener cars while reducing their environmental footprint. Now that we have identified the different factors that affect Ford, let us now take a look at how Ford is doing financially. In terms of their revenue and net income, Ford shows volatility in net income over the 5-year period, highlighting inconsistent profitability despite growing revenues, indicating that Ford is facing challenges in converting revenue growth into stable profits. Moreover, Ford recorded net losses in 2020 and 2022, largely influenced by non-operating losses such as other income, net and equity in affiliated companies, which indicates that the losses were driven by factors outside of Ford's core business operations. And in the year 2021, it marked a peak in profitability with the highest net income over the 5-year period. However, net income significantly dropped in 2022, followed by a gradual recovery in 23 and 24. As for revenue streams, wherein the automotive and mobility revenue showed an upward trend, highlighting this segment is the primary driver of revenue growth for the company, while the Ford credit remained relatively flat across all years, showing little to no growth. Let us now take a look at the different ratio performances of Ford. In terms of their liquidity ratios, Ford maintains a stable current ratio, meaning it has been able to meet its short-term obligations across the 5-year period. Moreover, Ford has shown a decrease of quick or acid test ratio over the 5-year period, indicating its increased difficulty in paying short-term obligations with its liquid assets. And lastly, Ford maintains a relatively stable cash over the 5-year period, indicating a limited number of cash available to cover the short-term liabilities. As for solvency ratios, Ford across the 5-year period indicates a significant increase in interest coverage ratios, indicating improving financial conditions to cover its interest expenses. Moreover, Ford retains a stable debt ratio, indicating a consistent level of debt leverage used to finance its assets over the time period. Next is profitability ratios, wherein the gap between gross margin and operating margin suggests significant operating expenses, limiting profitability despite a relatively healthy gross margin, indicating that high operating costs are reducing Ford's ability to convert gross profit into net profit. Moreover, Ford shows a significant spike in profitability ratios in 2021, suggesting a peak in operational and financial performance that year. However, in 2022, Ford experienced a noticeable decline across all profitability ratios, indicating reduced net income. Ford's return on equity is the most volatile among the ratios, implying fluctuating shareholder returns. Moving on to operating performance ratios, Ford shows a steady increase in asset turnover from 2020 to 2023, indicating improved efficiency in using assets to generate revenue. The asset turnover ratio peaks in 2023, reflecting the highest operational efficiency during the 5-year period. A slight dip is observed in 2024, suggesting a minor decline or stabilization in how effectively assets are being utilized to drive sales. And last but not the least, cash flow performance ratio, where Ford's cash flow to revenue ratio decreased from 2020 until 2022 and then increased in 2023 and 2024, indicating a difficulty in converting sales into cash from operations up until 2022 and is recovering beyond. Similarly, Ford's cash return on assets slowly decreased from 2020 until 2022 and then increased in 2023 and slightly decreased in 2024. This indicates that Ford struggles to efficiently utilize its assets in generating cash. The same scenario applies for cash return on equity, which slowly decreasing from 2020 to 2022 and then increased in 2023 and slightly decreased in 2024, indicating that Ford struggles to efficiently generate cash returns for its shareholders. Ford's debt coverage and debt payment ratios share the same pattern as the previous cash flow performance ratios, with both decreasing until 2022 and beginning to increase by 2023 and slowly decreasing by 2024. This indicates that Ford does not have enough cash from operating activities to cover debt and that it has less financial strain from debt obligations respectively. For the next part of the analysis, let us delve into the value chain framework of Ford and its primary and support activities that are essential in attaining profit margin. Let us first start with the support activities, which is first the firm infrastructure, where Ford's strong firm infrastructure demonstrates a thorough and integrated method of addressing all aspects of the company's business, especially when it comes to sustainability, governance, and customer relationships. The governance system is strong with a special sustainability, innovation, and policy committee that convenes regularly to evaluate Ford's performance on economic, environmental, and social matters while making sure that their sustainability policies and values are ingrained in all organizational levels. Next is human resource management. Ford's human resource management approach focuses on a commitment to creating an inclusive, equitable, and supportive work environment for every employee. The organization values diversity, equity, and inclusion, providing equal treatment and opportunity for each person in the company, which is central to attracting, developing, and retaining talent. Ford supports job security and stability, and career development through training and development programs to upgrade technical skills and career readiness. Moving on to technology development, Ford's technology development is closely linked to its focus on sustainability and innovation, especially in the context of shifting towards electric vehicles. The company is heavily investing in the creation of sophisticated technologies to aid the manufacturing of carbon neutral vehicles and to make sure its manufacturing processes are more sustainable. And the last of the support activity is procurement. Ford's procurement strategy emphasizes a pledge to responsible and sustainable sourcing within its supply base. Ford's responsible material sourcing policy emphasizes mitigating risks related to conflict minerals and aligns with environmental, social, and governance principles. As of 2022, Ford started incorporating sustainability metrics into its supplier sourcing decisions, including the Sustainability Self Assessment Questionnaire that asks suppliers to assess and report their sustainability practices. Furthermore, it is also worth noting that Ford does also have an extensive supplier network wherein their different parts are supplied from different companies across the globe. For example, an NHK Spring from Japan that supplies their suspensions, or Autoliv from Sweden that supplies Ford's airbags. Let us then proceed to the next, which are Ford's primary activities. Starting with inbound logistics, as mentioned earlier, Ford does have suppliers from all over the world. Furthermore, they utilize a just-in-time or JIT approach or a lean production cycle, thus reducing the accumulation of their inventory. Furthermore, Ford has partnered with Penske, a rental leasing logistics company, in which they have contributed around more than 700 inbound trailers working at 95% capacity to help bring the materials to Ford's manufacturing plant. Next is operations. Ford has largely incorporated sustainability metrics throughout its operations through the assessment of suppliers on the basis of an ESG criteria. Responsible material sourcing is also a focus area, especially for electric vehicle component supply chains, to ensure that materials such as cobalt, nickel, and lithium are sourced ethically and sustainably. Ford creates sustainable material solutions for vehicle manufacturing and optimal waste management of operations, which are integral parts of the ESG effort. Proceeding to the outbound logistics, Ford's outbound logistics are concerned with the delivery of vehicles and parts in efficient and responsible ways that reduce the impacts on the environment. Ford transports their finished vehicles throughout their various dealerships and company stores. Moreover, with their key partner in logistics, Penske, they have around 500 outbound logistics, which transports these finished vehicles to different dealerships around the world. As for marketing and sales, the marketing team is spread all over the world, offering different marketing strategies in different countries. Furthermore, Ford targets and markets using online websites or social media platforms and television advertising to draw in potential clients. And lastly is Ford Service, where they have multiple channels for customer engagement, enabling direct interaction through dealerships, websites, social media, etc. Moreover, they also offer at-home charging solutions and convenient online scheduling for service appointments for those customers who are looking to have their cars consistently maintained in the most convenient way possible, to which Ford has adapted to. With the value chain analysis in mind, let's move on to the VRIO, or the Value, Rarity, Imitability, and Organization framework to evaluate Ford's internal resources and capabilities, which can be sources of sustainable competitive advantage. Let's first start with Ford's tangible resources. Manufacturing facilities are essential for producing Ford vehicles efficiently and with lesser costs, which is valuable. However, many competitors like Toyota and General Motors also have global manufacturing plants. Furthermore, while this is expensive, manufacturing capacity can still be replicated by other firms. Despite these, Ford is well structured to operate these facilities globally. In turn, this makes it a competitive parity evaluation. Moreover, having a skilled workforce improves productivity, innovation, and quality. Yet competitors like Toyota also have skilled employees. Furthermore, employees can move between companies and their skills can be trained. Nevertheless, Ford invests in workforce development, making it competitive parity. Having research and development facilities are important for innovation and staying competitive. Not all competitors invest heavily in research and development. Yet, there are major competitors who have research and development centers like Toyota. Despite this, Ford innovates across their various product lines, making it a temporary competitive advantage. Having a strong financial capital enables investment in production, research and development, and marketing. However, many global automakers also have significant access to capital, which can be acquired in many ways. Nevertheless, Ford manages its finances effectively, making it competitive parity. Technology systems aids in logistics, automation, CRM, etc. However, it is not rare as similar systems are widely adopted by other companies. Moreover, technology can be purchased or developed similarly by competitors. Yet, with this, Ford utilizes tech in its operations, making it competitive parity. Next is Ford's intangible resources. First is brand reputation. Given Ford's long history of success, all the more is its brand valuable and well known. Not many brands have over a century of history and recognition like Ford because brand reputation is built over time and not easily replicated. However, Ford has struggled with reputation management, for example, recalls of their cars in the year 2024, making the evaluation unused competitive advantage. And the last for intangible resources is industry expertise. So Ford has over a century of experience, which only a few companies have this depth of legacy knowledge. While Ford does have this experience, so do other major competitors like Toyota have experts in the industry. Nevertheless, Ford has leadership and strategies that capitalize on this depth of experience, which makes it a temporary competitive advantage. Lastly is Ford's capabilities. We have global supply chain management. So having a good global supply chain management is crucial for delivering products globally. However, having a global supply chain is standard in the auto industry. Furthermore, this can be replicated with investment and partnerships, and other competitors also do this. Even so, Ford has decades of experience with different supply chains, which make it competitive parity. So next is marketing and brand management. Having a strong management in the marketing and brand department influences sales and brand perception. However, other competitors also invest heavily in marketing. Additionally, other competitors have also similar marketing themes with Ford. But regardless with this, Ford has always utilized marketing to generate sales and continues to be relevant to its customers, making it competitive parity. And last but not the least is workforce training and development. So engaging in workforce training and development enhances productivity and innovation among employees in Ford. Yet, many competitors also invest in this with standard practices being widely available. While it is replicable to other competitors, Ford has also focused a portion of their resources into internal training and development programs. And last but not the least, let us now tackle Ford's strengths and weaknesses and what makes Ford different from the rest of the car brands. Ford's strengths are in terms of product diversity, brand reputation, customer engagement, sustainability initiatives, innovation, and revenue stream diversification. These strengths allow Ford to address evolving market demands, particularly in the shift towards electrification and digital integration. However, the company faces challenges with high operational costs, supply chain complexity, and intense competition, especially in the electric vehicle market. Its reliance on innovation and evolving regulatory landscapes adds pressure to adapt quickly and efficiently. This analysis is important to Ford because it provides a clear understanding of internal capabilities and limitations. It helps the company align its strategic decisions with areas of strength, such as leveraging its tech and sustainability goals, while proactively addressing weaknesses like cost efficiency and supply chain resilience. This internal reflection is crucial for sustaining competitiveness, especially in a fast changing automotive industry. Ford possesses the key capabilities to compete in an evolving automotive landscape. With the right alignment of resources, bold leadership, and a commitment to operational excellence and innovation, Ford can not only sustain, but lead through the next chapter of mobility. At the heart of our recommendation is a simple yet powerful strategy: optimize, adapt, lead, and evolve. Thank you for your attention. We're the Homies Consulting Group, and this concludes our internal analysis of Ford.